Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, the US oil industry is in a deep recession. As demand falls due to the coronavirus pandemic, will American companies ever return to the boom years? And the global telemedicine market size is expected to reach over $155 billion within the next 6 years due to the rising demand for self-care medicines. I'll be speaking to the founder of one company who entered the market years before the COVID-19 crisis. Before those discussions, here's our business correspondent Simon Pusey with a breakdown of the biggest business stories trending in Britain this week. Simon, the Office for National Statistics has published some details about Britain's labour market. Of course, we're expecting unemployment to surge after the lockdown, but these details didn't take that into account, did they? Because they're backdated.
Yeah, so figures covering the 3 months to the end of February show that the economy struggled to overcome Brexit uncertainty, remember those days, and the impact of cuts to welfare benefits, which forced many older women and younger people to take low paid employment. Unemployment increased from 3.9% to 4% in those months. That's according to the Office for National Statistics. 4%, if we're looking at unemployment as 4%, we'd absolutely take that at the moment, with what's happening in terms of the coronavirus. It's important to point out that the difference between, say, the US and the UK is that the US, they just take a week to have a snapshot of basically what employment and unemployment is like in the country, whereas for some reason in the UK, we do this in 3-month chunks. So the contrast is quite a lot. In the US, they've already worked out that in the past 4 weeks, there have been a total of 22 million people made unemployed. It's impossible for us to do that here in the UK. The April overview from the Office of National Statistics covers those 3 months, and that's in a kind of like bygone era now. We're talking about, Brexit and the age of general elections and the flooding that we had. So it's really hard to know exactly what's happening right now. Unemployment rate is I think a lot of analysts think it's going to rocket here, as it will around the world. The one plus point, obviously, is the government that have come out and with this furlough scheme, which means that people who are affected by the virus and that they can't work means that they will get 80% of their wages paid up to a set limit of £2,500 per month. So the COVID-19 scenario that's been published by the Office for Budget Responsibility, which makes the forecast for policymakers, it says that unemployment at about 10% is what they're expecting in the coming months. That's from 4% where we were 3 months ago, or in the last 3 months, to 10%. Again, I think people would take that given the current circumstances. And in the US, you're looking at something like 20% unemployment right now.
Very quickly, Simon, before you have to dash off, Richard Branson, the British billionaire, he's under fire this week.
Yeah, so he's said he's going to put his luxury resort Necker Island up as a kind of, he's going to mortgage that, and he's going to put that as a kind of a guarantee if he can get a loan from the British government. So he obviously owns the Virgin Group. There's lots of companies in that. He's sent an open letter to staff, and looks like he's looking for a loan of about £500 million, saying that the airline that he runs, their survival is in debt. Virgin Australia has already gone into administration, and he's saying he could mortgage his Caribbean island, Necker Island, and say that's a kind of guarantee on that loan. He's been criticised, though. Obviously, he's a multi-billionaire. People saying, why aren't you going to your own personal expenses and your own personal money to pay off these debts that you're struggling with at the moment from your companies? He's also been criticised for tax avoidance in the past. He doesn't live in Britain. He doesn't pay any income tax in Britain. He's said that those criticisms are unfair. He said he left Britain because he really enjoyed these Caribbean islands called the British Virgin Islands. That's why he moved there. He didn't move there for tax avoidance reasons. He also points out that he employs many staff across the world. So, he's being criticised from sort of all angles, really, just as, I guess, another billionaire who's using the government schemes and trying to get money from the government. But, unprecedented times for everyone, you, me, and billionaires.
Here's some other business news from across the globe. Facebook on Wednesday announced an investment of $5.7 billion for acquiring a minority stake in Geo Platforms Limited. The company is the digital technology arm of Reliance Industries, owned by Indian billionaire Mukesh Ambani. For the billion-dollar price tag, Facebook will receive a 9.99% stake in the company. The leading representative body of the EU Industry and Trade in wines has warned that 1 billion litres are at risk due to a lack of shortage after the closure of bars, restaurants and shops across the continent and a fall in exports has led to a surplus. The body has called on the European Commission to intervene, as the situation could have serious repercussions on employment, particularly among smaller businesses. US President Donald Trump has promised to offer a financial lifeline to the American oil industry. The West Texas Intermediate, the benchmark for US crude prices, turned negative for the first time in market history on Monday, plummeting $40 a barrel below zero. The US is running out of space to store crude, caused by the global coronavirus lockdown, which has prompted a collapse in demand. Trump said he had instructed the Treasury to help develop a funding plan for embattled oil producers, some of which were forced to pay buyers to take their oil off their hands. For more on this, I'm now being joined by Jamil Ahmed, the Global Head of Currency Strategy and Market Research at FXTM. Jamil, somebody on my WhatsApp described the cost of a barrel of oil is cheaper than a bottle of Coke. I saw on your Twitter feed that you said it's cheaper than a slice of pizza. What happened on Monday?
History happened, and if there's the old cliche, you never say never, this could not hold more truth to what we're dealing with now in the financial world. Let me just give you a few different statistics. So at around 2 p.m. London time, the oil market for US oil had already suffered its biggest intraday fall since the 1984s, 1982, 1984. But actually what occurred following that even made that seem like a lifetime ago. Because at that moment, the oil price was around $14. Now, as the trading day progressed, as specifically when the US trading session began, oil prices started to fall into $8, $6, $4. And at that point, because oil is a futures contract and it's held by the CME group, it wasn't even known if the prices could go negative. This was something that nobody had ever seen before. And then a statement became clear that yes, prices could go into negative territory. And there you go, even more panic in the market. Prices went down to $0, then minus $1, and all of a sudden we went to minus $40. So essentially, a seller was being charged to actually provide oil to somebody. Which it sounds crazy. So we went from oil being the same price as a pizza to the same price as a Netflix subscription to a slice of pizza to something on a value deal on a McDonald's to all of a sudden you actually being charged to actually give oil away, because this is what was happening. Oil had to be given away because the contract of that specific option was expiring yesterday. Now we are in a new contract now, but we can't say that the same thing isn't going to happen again either.
It's so serious, and it's absolutely mind-blowing. Thank heavens we have somebody like you to come and explain it for us. The Financial Times have described the entire scenario as a nasty sign of a deeply dislocated market. What does that mean?
Well, the dislocation is on so many different levels. One, because of the unprecedented and unknown nature of any of this, including what's happened in the world. Let's talk about both finance and let's talk about the world, because this is a big interconnection here. Nobody knows what's going on what's happening, because none of us have experienced this before. So that's one element of the dislocation. Now, the technical element of the dislocation for oil prices specifically is that, one, there's no storage left. There's literally nowhere else to store oil, which is a big problem for producers, obviously, because they can't produce something they can't store. It's like having a wardrobe and your wardrobe's already completely full, but you keep filling up anyway, and eventually that wardrobe breaks. This is what happens to oil storage, and that's why prices went negative. And the third dislocation is that because of the lockdown restrictions, even if they do get eased gradually, nobody wants oil. There's no need for oil right now because there's already a surplus. So what the IEA suggests, which is the International Energy Agency, they think that during this lockdown, specifically in April, that oil demand could fall by 25 to 30 million barrels per day. Now that's per day. So imagine what that is split across 30 days. That's how much of an extra surplus comes into the market, which eats even more into the storage. So again, this can happen again, or even more crazier things could occur because there's literally nowhere to keep oil.
Ghana has become the first country in sub-Saharan Africa to ease movement restrictions after a 21-day lockdown of its biggest cities. The move has been met with mixed emotions. In recent weeks, African governments have been criticised for replicating the coronavirus prevention strategies of wealthier countries without taking into account key differences and the need to adapt to the local environment. For more on this, I'm now being joined by Olusegun Okubanjo, founder and chief executive officer of Obsidian, a leading London-based corporate and project finance firm that is committed to supporting private sector-led growth in the continent. Olusegun, 21 days, some say too soon, some say this is the right way to do it in Africa. What's your opinion on this?
I think that it might be early, but you have to remember that Ghana's lockdown has lasted 3 weeks. And they still have other restrictions in place. Schools are closed, large gatherings are banned. And in context, I mean, they've currently suffered 9 confirmed deaths, which is about 0.3 per million, versus the UK, which has lost about 260 souls per million. So, it's a much, it seems informed. And remember, Ghana has conducted very extensive testing of its population, which means these numbers are pretty reliable.
It's interesting, the president has addressed the nation several times and he emphasised the difficulty of the lockdown facing the poor. And there has been now growing criticism faced towards Africa because everybody's saying that, treat Africans the way Africa needs to be treated. Don't just copy and paste what the heads of states are doing in Britain and in America and trying to lock down. Do you think that's too harsh? Do you agree with that?
I mean, look, economic considerations play a huge role, not just in Africa, but in every market and country that's been affected by this global crisis. And in Africa, the policymakers are right to adapt these restrictions or responses to suit the needs of their specific societies. And I mean, yes, it might seem riskier or change the balance of risk, but short breaks, curfews, wider general restrictions, mandatory wearing of masks, they're options beyond just a complete shutdown. And you also have to remember that in Africa, a large proportion of the workforce is self-employed. I mean, in the UK, 86% of the people are employees. But in Ghana, and many African countries, 80% are self-employed. So of those that are even employees, more required to supplement their income in the informal sector because of the relatively lower wages. And so it makes sense for governments to be sensitive to the economic and social necessity.
Are they being sensitive? Are they? Do you think they've, obviously in Ghana we're seeing that, they may be, but do you think, what about Nigeria? Do you think they're being sensitive? Do you think they're overreacting or they're pandering to Britain?
I think that this is the crisis. That's first and foremost recognize that. And I think governments are reacting in a way that it's difficult to be proactive, given the challenges they're facing. In markets like Nigeria, you've seen initially the Nigeria seemed to be following the Swedish and the original UK model of contain and observe before quickly moving to a lockdown containment model. And if you've noticed, in Nigeria, it's been state by state, and some of the states have had 2-week lockdowns, then a few days of non-lockdown, so people can go out, shop, make some economic activity, and then going back into lockdown again. And I see some degree of modification or adaptation beginning.
Coming up, telemedicine. Will the innovative software become the new norm after the coronavirus crisis? See you after the break.